Ladies and gentlemen, welcome back to another Bitcoin update. Today we're looking at unique charts. We've got the money supply, Bitcoin and S&P 500 charts that not many people look at on crypto YouTube. So a bit of an exclusive view, and they actually give us an astonishing amount of clarity, again, on Bitcoin and the S&P, and joining those two charts together, we can start to really dissect why the resistance has been so strong for Bitcoin and why Bitcoin is in the predicament it's in. We're also going to be diving very deeply into the bear case. What exactly will happen if we go down? And I mean exactly, I mean precisely what will happen. You know, what the worst case scenario is for Bitcoin, and then obviously discussing my point of view, being someone who is neutral on the market right now, why I'm neutral, and going through those points that I've made in the past as well. So quite a few exclusive charts to look at today. I haven't looked at them before, and they're very rare on crypto YouTube, but I can tell you right now, they're very informative, and you should definitely stick around to watch the entire video today. It's very important. So guys, thank you for watching in advance. Let's get into it. Okay guys, I'm going to be focusing in today on charts that you might not have heard too much about on other YouTube channels. These are the Bitcoin chart, of course, everyone's heard about that, but the Bitcoin money supply adjusted chart as well. So this is a chart that's adjusted to the money supply, adjusted to printing essentially, and it's quite important. It tells us quite a lot about Bitcoin, and it also tells us quite a lot about S&P 500, right? So I'm going to be splitting the screen here. On the left-hand side, you've got money supply adjusted, and on the right-hand side, you have regular, and then we're going to be diving into the bear case scenario, what we've got going on with the bear case, what it actually means, how bad could it get. We're going to be diving into the Bitcoin ranges very briefly. We'll do that actually at the start of the video to give context of where Bitcoin is in the situation Bitcoin is in. And we'll be looking into monthly chart as well. We'll be looking into daily chart very, very briefly. We'll be looking into this little photo here, as you can see on the screen, with S&P 500. Not only S&P 500, but major companies, major stocks in the stock market going down massively in the last 24 hours. And that's its relation to cryptocurrency. And then we'll finally wrap it up by looking at monthly returns. And monthly returns are quite important right now because we were meant to be seeing a red September. Now, September's coming to an end very shortly. We haven't really seen that much of a red September, and we do have a trend that says October's very green, so it'll be interesting to see what happens there. But we'll look into that in a second, and finally we'll dive into some community poll results as well. So quite a wide variety of things to discuss in this video. A lot of it's unique, a lot of it's information we haven't discussed before. Before we get into anything, I want to quickly give a shout out to the VIP group on Telegram. This is a Telegram group where you can trade altcoins, make money on altcoins. We have the information and results group on the screen right now, what you're seeing. You can join this group for free. Basically, it shows you, what the payment addresses are, what the payment information is, what you actually get by paying for the group, and also the VIP trading results. I'm very transparent with our trading results. I give you exactly, what we've done in the past, our win-loss percentages. So currently, our win-loss ratio over the course of 100 trades is 79%, which is absolutely exceptional, to be honest. So go ahead and check that out. But without further ado, I think that was a bit of a lengthy introduction. We'll get into it now. We'll start by, as I said, giving context of the situation for Bitcoin. The macro context is something that a lot of people are quite familiar with by now. We do know, what's going on with the ranges of Bitcoin. I'll explain it very briefly. We have three definitive ranges on Bitcoin. The red range, right, the orange range, and the green range. Now, obviously, the color is subjective. The color doesn't matter. But the fact of the matter is those color-coded ranges represent where the support and resistance zones were in those relevant price regions. So for example, we spent the vast majority of the bear market in this orange range between around 24.5k and 18k. We spent the bottoming out phase below 18.5k, and we've been spending the last kind of 6 or 7 months on Bitcoin above 24.5k and below 32k. So that's our fresh range right now. That's where we are. We're kind of bouncing in between support and resistance in this massive range here between 24.5 and 32k. All right, so that's what's going on for Bitcoin. All right, and we do know, of course, that if we break above 32k, we're getting back into territory in which we saw the vast majority of the bull market from, right? So we're getting back in bullish territory. If you really want to conceptualize Bitcoin in a very, very simple manner right now, you can actually do this. Delete the entire chart, go to your Bitcoin chart, and draw a horizontal line at around 32k, and you'll very clearly see that you have two distinctive levels. You have the level down here, which is bear market. You have the level up here, which is bull market. And so obviously, getting back above 32k would be getting back in the bull market region and be very good for Bitcoin. But right now, we're not quite there yet. I've used the analogy before, and I'll use it again. We're in no man's land, right? Imagine, this over here is the Germans, this over here is the British, it's World War One, and this is kind of a zone in between, right? So it's like trench warfare. We're in the zone in which it's very difficult to be bullish or bearish on Bitcoin. The kind of best course of action is really just being neutral. And people say, I'm not going to spend too much time discussing this, I've discussed it before, but people say that being neutral is a cop-out. I don't think it's a cop-out at all. I think if the market's moving sideways for 7 months straight, that clearly means that there's no clear bullish or bearish narrative, so being neutral is actually the logical position. I'm very much a fan of the opinion that there's 3 positions you can take in a financial market: bullish, bearish, or neutral. Neutral is very valid, and that's what we are right now. So that's where we are right now. We're between 24.5 and 32k. I've done community polls in the past saying, do you believe Bitcoin will get above 32k by the end of 2023? Or do you believe, rather, Bitcoin will end 2023 above 32k? It's about 50-50, and this further instills my point that I was making before. It's neutral. The market's neutral. If half the people think Bitcoin's going to get above 32k, half the people think it's going to remain below it, what can you say other than neutrality? And even if you go down to previous polls I've done polls, what comes first for Bitcoin, 40k or 20k? And even that, 42% to 58%, it's pretty much neutral. Going back further, it was 38% to 62%, but as the time's gone on, we've gone closer towards support, it's shifted more towards neutral. So the entire market, all the market participants in general are neutral right now, and the market's reflecting that. So the big question still remains, though, where are we going to go? We're going to go below 24.5k, we're going to enter a downwards consolidation region, or we're going to go up and, break above 32k. That's the big question we're really desperately trying to answer to the best of our ability. But I still think the best answer I can give you is it doesn't matter. Wait to see what happens before you react. Wait to see what happens if we drop below before you short. Wait to see what happens if we get above before you long. That's just the simple position you can take when you're neutral. Wait for a range breakout. But obviously that's not satisfying. It's not a satisfying answer. And so we can try to dive into a few more things. This is where we get into things like Bitcoin money supply chart. These are not charts that are conventionally looked at all the time on Bitcoin. They're looked at in situations like this to try add a bit of clarity to the current weird situation we're in. That's exactly why I'm using it right now. So as you can see here on the regular Bitcoin chart, if we draw a horizontal line from the all-time high in 2017, that line is actually drawn around 19k, and you can see that line collides here around these August lows, around that 18k region. But if you actually take the money supply chart, right, which is Bitcoin adjusted for the money printing essentially, and you draw the same line from a 2017 all-time high, you can actually see that this line from a 2017 all-time high supports where 32k is roughly on the regular Bitcoin chart. Okay, it actually is where we bounced off during the bull market over here. It's where we rejected from over here. We got above it very briefly, dropped back below it. It's still acting as resistance. So this in itself, okay, this chart here, because a lot of people are thinking right now on Bitcoin, why is the resistance so strong? Why is it so hard to get above 32k? Well, this could be one of the reasons. The money supply chart on Bitcoin is indicating that 32k or around that level, right? It's very hard to say exactly where it is because the chart's constantly changing to an extent. It's not exactly clear, but 32k or around that level at least, right, is basically where the major resistance is stemming from a 2017 all-time high based on money supply chart. So that kind of adds to the strength of the resistance to the upside, right? So that's not good, right? That's not good because it means that what we're seeing right now, ultimately, from a adjusted to money supply perspective, what we're seeing ultimately is getting below this line. And then resistance support flip and then going downwards. So this is not a good chart to look at. And the other money supply chart I wanted to look at was the S&P 500. Okay, now we know for a fact that the S&P 500 is only loosely correlated to Bitcoin. It's not a very strong correlation, but it is a correlation nevertheless, and it has shifted into strong correlations over time, sometimes weak, sometimes strong. So overall, it is something we need to be aware of. And we could see, obviously, the regular S&P 500 chart has been skyrocketing for decades, okay? Basically, ever since the gold standard was removed, this thing has been absolutely pumping to the heavens and above. And especially since the global financial crisis in 2009, this thing has absolutely skyrocketed. I mean, it's gone up, massively, 6x, 7x, 6.5x. But if you actually look, and this just goes to show how fake the S&P 500 is and how fake the stock market is. If you adjust it for the money supply, this chart has not moved. In fact, it's gone downwards since 2000, right? The year 2000, since the dot-com bubble. So this has gone sideways for, 23 years, essentially. And it's actually downwards. And ever since 2009, global financial crisis has actually been sideways, full stop. And what we've seen right now on the adjusted for money supply chart, guys, I don't understand. Okay, let me emphasize how major this is. Okay, this is a big deal. I know I'm brushing over it like it's nothing, but that's how I present content. This is a big deal. All right, we haven't actually moved upwards on the S&P 500. All the movement we've seen upwards is basically fake by money printing. That's essentially what it's saying. And on top of that, we're also seeing a very major resistance zone that has been tested since 2002, 22 years ago. It was tested in 2002, it was tested in 2007, it was tested here in 2017, 2019, 2021, and it's been tested right now that's bad, right? And we're rejecting from it currently. If we reject fully from that line and go downwards massively on the S&P 500 adjusted for money supply, we will do the same thing on the price chart and we will lead to an extensive correction there. Now, unless money printing comes in to save us, which is a possibility, this could be indicative of a very bad, not even, it's hard to say how bad it is because, again, the money supply chart is slightly misleading, but it's definitely going to be indicative of a period of weakness for the S&P 500. Maybe new lows, maybe come down for a higher low, but it's certainly not a good thing at all. And that's not going to be good for cryptocurrency. And so if we're adding these two charts together, we're adding the money supply chart on Bitcoin together, showing us that 32K is very, very well supported as resistance. And we're adding the S&P 500 chart being quite bearish, unless we manage, of course, to get above it on a pump. I don't know where that's going to materialize from, but it's possible. We actually are put in a pretty rough position for Bitcoin, not only Bitcoin, but the traditional markets in general. And this does support the bear case scenario. And again, this is one of the reasons why I'm not willing to say that I'm bullish on Bitcoin right now. As much as my regular analysis would lean bullish, I'm actually not bullish on Bitcoin right now. I'm neutral, as I've said before. And I'll tell you right now, as soon as we lose 24.5K, that neutrality is going to flip into pretty bullish, pretty bearish, sorry. That's not from a macro perspective. Obviously, 4-year cycle is still valid until we lose this level down here, 15K, but it's certainly not going to be looking good for Bitcoin if we form not only a double top, not only a break from major support, but also a rejection and a resistance support flip from money supply chart, and most likely a rejection on the S&P money supply chart as well. There's certain things that, look, put it this way, it's just not going to look good. So hopefully that doesn't happen. Hopefully Bitcoin holds 24.5K. Unfortunately, I can't give you any more clarity other than I hope so, because there's simply no clarity to give. As I've demonstrated, 7 months of sideways consolidation doesn't happen when there's clarity in the market. It only happens when there's a lack of clarity. And therefore, my neutral position, I think, is perfectly justified. As of right now, it's still a waiting game. But I'll tell you right now, if the bear case does occur, it's not necessarily the end of the world from a cyclical perspective. The only thing that would damage the cyclical structure on Bitcoin is breaking below 15.4K, which would be marking a new low, because we do know that on a cyclical basis, the cycle is built up by when the tops are, when the bottoms are, not what prices they are, but when they actually occur. That's the 4-year cycle. That's what it's made up of. And so, yeah, we're not in danger of breaking the cyclical structure, but we're certainly in danger of entering an extensive period of correction that could last months, in a similar fashion to what we did in 2019, for example, which, we went upwards from below, and then we corrected for basically 6, 7, 8 months, and then we went upwards from there after the halving. We could be in for something like that if we lose 24.5K. It could basically just put the nail in the coffin for Bitcoin for seeing, 6, 7, 8 months of downwards price action until after the halving. And obviously, that's not the end of the world, again, from a cyclical level, but it's certainly not what we want to see. We don't want to see Bitcoin die for that period of time. I want to look more into this bear case scenario in a second, but before we do that, I want to interrupt the video briefly by talking about the Bitget exchange and the BingX exchange.
Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have 2 exchanges for you guys, 2 options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got BingX. That's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right? With a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up using my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on the good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video.
Alright, so diving back into it, where exactly would Bitcoin go if it did break below 24.5K? Now, 24.5K, as you can see on the screen here, is this blue line I've just drawn in. So breaking below that would be bad for Bitcoin, of course. That would activate the bear case scenario. We do have various support zones in the bear case. For example, we have, of course, 24.5K itself, but obviously if we lose that, which would constitute the bear case, we'd go downwards and we'd start retesting something like this yellow line down here. That yellow line is stemming backwards from 2017. You can see it back there, June 2017, July 2017, tested again in the 2019 bear market, tested again in the COVID drop, marked the bottom in 2022. That would be our next chance of bottoming out. Although I will say that If we were to lose 24.5k, it seems quite unlikely that we'd only go down, a couple of thousand. It just doesn't seem very likely that would occur. I think we'd probably see more extended downside price action, but we'd have to wait and see. But I can certainly say that if we lost this yellow line, we'd really start threatening to go downwards and start testing, something even as far down as 18.5k. So you can see Bitcoin is actually, it's still on major support, but it's actually not in a very comfortable position. It's quite fragile. If we were to lose 18k, that's when I'd start to say the 4-year cycle is really, really, really in danger, because that's dropping back into the lowest range we have in the bear market. But ideally, we don't get to that point. And I don't want to come across as super bearish in this video. As I said, I'm neutral on Bitcoin right now. If I was super bearish, I'd say I was bearish. So I hope this video doesn't come across that way. I'm just giving you the scenarios. But I can say this for sure, 18k is probably the lowest we can possibly go on Bitcoin while maintaining healthy cyclical structure. If we drop below that, we're in real big trouble. And honestly, we really wouldn't even want to go that low to begin with. Ideally, we'd stay above 24.5k to begin with. So yeah, that's what we're doing. That's kind of the gist of Bitcoin right now. You can see that overall, if you're looking at what the structure is on a macro basis on logarithmic, you can take this 2017 uptrending line, you can take the line from the previous top or near the previous top in 2021, and you can actually draw some sort of triangular formation. You can see these yellow lines come together in a triangle. That reaches an apex around February next year, which means we obviously need to break out around February next year, either upside or downside. At the latest, I think we'll see it probably a lot before that. But that's just something worth considering as well. If you're getting bored of Bitcoin, bored of the Bitcoin price action, look, unfortunately, it could last a little bit longer. That's just the reality, and this is just the part of the cycle we're in. But what I will say is that we have two very important kind of events happening. I have two pink lines on the screen, as you can see here. The first pink line represents the absolute latest point in time the ETFs can be approved or denied, and the second point in time equals kind of the halving. And we do know that these two events are very, very bullish, potentially. We do know the ETF is most likely going to be accepted based on the Grayscale lawsuit victory, based on BlackRock never really applying unless they get approved. They've only been rejected once in their entire lifespan. And we do know the halving, of course, is a very bullish event historically. So what I can say is this. It's kind of a race against the clock for the bears. If the bears want Bitcoin to be destroyed, if the bears want Bitcoin to form new lows, they basically have until we reach these pink lines. And that's not a very long period of time if you think about it. It's a drop, to 15.4k, 40%, in a period of 3 plus 4 to 7 months. It's not actually a long time. So if the bears want Bitcoin to die and go to new lows, which I have no idea why they'd want that to happen. Like, why would you want Bitcoin to go down? It's just ridiculous to me. But anyway, they think that the bears, for example, they want that to happen, I guess, or at least they think it's going to happen. They don't have much time to do it. So they have to be quick, because we do know these deadlines are coming up, very bullish deadlines. And it kind of reassures us a little bit that even though Bitcoin, of course, is in not like a perfect position right now, in fact, as I said, it's not bullish, it's neutral at best. It's not actually the end of the world from a cyclical basis yet. We start losing things like 24.5, we start losing things like the yellow line, we lose 18.5, that's when we get really, really bad in trouble. And that's when you start, considering really starting to change your opinion on Bitcoin. But as of right now, it's actually still in a relatively comfortable position. I want to make that known that those deadlines are there. I want to make it known that the bears don't have much time, because I feel there's a lot of doom and gloom going around. I don't think it's the end of the world yet. Nothing's really changed for a long period of time on Bitcoin from a macro perspective. Really, for 6-7 months. BLX is the same story. We've got a resistance on the BLX. And we've dropped below that resistance, but overall, it's just the same as the weekly chart. We've got major support as well supporting us, major resistance below. It's just one of those things. We just have to wait and see what occurs, really. I was going to talk about something on the monthly chart in relation to the money supply chart. What you can actually see, if we go to the monthly chart on money supply, what you'll go ahead and see is that the monthly chart on the money supply basis, the 2017 all-time high moved across, looks very similar to the regular monthly chart on a regular basis. Where have I put it? Over here, as you can see. So this is the regular monthly chart, and we had a major level at 29.4k. We went above it briefly, we rejected from it, went downwards. That's actually the same level lining up with the 2017 all-time high on the monthly chart adjusted for Bitcoin money supply. Now, I don't know if that makes sense to you, but what it tells me is that basically this resistance on the monthly chart that we briefly got above is actually much stronger than we previously thought, because it actually is the 2017 resistance on the money supply adjusted chart. So I know there's a lot of words going on there, it's slightly complicated, but it does reinforce the fact that that resistance is very, very strong. And it makes sense for that resistance to be strong, right? Even if you forget the money supply chart, it makes sense for the line in the sand, the dividing line between, you know, the bulls and the bears. It makes sense for that to be a strong level. So it's not something to be scared of, it's something to be, it's something to be aware of. And if we do get above it, it's something to be very ecstatic about breaking. That's the reality there. So ultimately, quite a lot going on. Money supply charts, all that 9 yards, all that stuff. Daily chart hasn't really made much price action movement. We saw a break above the triangle on the daily chart we discussed yesterday. It was ultimately a massive scam. We still are above it currently. We're rejecting briefly from 26.5k. Hopefully we can get above that. We did bounce off RSI support. The daily chart's a mess. Short term's a mess right now. I don't want to spend too much time on it because it really is just scam price action. Just up, down, up, down, up, down. It's been like that for a long period of time. So it's very, very messy right now. But my opinions on the daily chart have been made very clear. I think if we start testing this green box again, it's not looking particularly great. We shouldn't need to go down again. But overall, as I said, it's very hard to have an actual opinion on Bitcoin until we break it or hold it definitively. So it's just one of those things. That's why I don't want to really waste time on it. Stock market's been tanking. You can see this is a photo of basically performance of the stock market recently. It's just been absolutely terrible. Luckily, Bitcoin has managed to hold up a decent amount, which is interesting to see. I don't really have much to say about that other than the fact that it's interesting to see Bitcoin show resilience even in wake of stock market bad news. And, you know, look at S&P 500 in the last, let's just take a look at S&P 500 in the last few days, few weeks. It's been tanking. It's been really, really tanking, and Bitcoin's managed to hold its ground. That's because the Bitcoin support right now is more important than the S&P price action. But I think if we do lose the support on Bitcoin, that's when we'll really start to feel the effect of that S&P drop. So hopefully the S&P can bottom out sooner rather than later, at least a short-term bottom. We've got multiple pink lines, uptrending lines of support, as you can see that we're testing right now. Hopefully we can find support here, see a little bounce. That could give Bitcoin the momentum it needs to form a higher low and move upwards. That's kind of something we need to be seeing. As for the last thing I want to talk about, as for Red September, as you guys know, there is a trend in the market where Bitcoin generally sees red Septembers. We've seen 8 out of the historical 10 Septembers being red. And we've actually seen this September, yeah, we've still got a few days left, but overall it's up 1%. So it hasn't actually materialized. But what we can see as well, if we're moving into the next month, we have a green October trend. We have a green October trend where 8 out of 10 Octobers are green, and that's the same quantity of Septembers being red. So it's just as green as September is red, and it's actually greener because in October we generally see an upwards move of roughly average 20, 25, 15. I haven't done the maths, but it looks like something like 20% upwards, whereas the red Septembers were like a 7 or 6% downwards. So, if you believe in monthly chart trends, you should actually be believing that October will be good. So as you can see, there's lots of evidence contradicting each other. It's very difficult to have a strong opinion, but I sound like a broken record. I've said that so many times. But I wanted to show you those charts because I thought you might find them interesting. Overall, I think I'll end the video there before I start repeating myself too much. But guys, thank you for watching. I hope you enjoyed it. Before we end it, check out the Crypto Academy's Become a Trader course. This is a 10-unit course developed by the Crypto Academy, which is myself and Megawell Crypto. We are the sole owners, operators, founders of this course. We developed it last year. We released it last year. We've accumulated over 140 members currently. And you can check out all the information on the website and ultimately throw us an email at our email address here, cryptoacademycourses@gmail.com. So guys, thank you for watching the video. I hope you enjoyed, and I'll catch you in the next one. Cheers.